In this video, we're going to show you everything you need to know to get ready for this week's Alibaba release. So to do this, we'll be using our Alibaba earnings model, which you can download on our website for free, gutenbergresearch.com. Just click on the free models tab, scroll down to Alibaba, click the button, and you'll see it downloads right away. And if you're new to our approach, be sure to visit our education tab, where you'll see the videos that go through a full demonstration of how our modeling approach works. And you can also download our document, which is 37 pages long, goes through every little detail of how we approach financial modeling, but you can just focus on the areas that are of interest to you. So now we can go back to our model, and there is some additional complexity with the Alibaba model. Obviously, the majority of their operations are in China, so we have to model those operations based on Chinese yuan. And then we translate it back to USD at an exchange rate, which you can see at the top of our segment detail section. So this means for each quarter, you'll see we have two columns, one for Chinese yuan and one for USD. So the full income statement works that way, which is driven off of the operating metrics that we have down in our segment details. So the company has a number of different businesses, so it gets a little complex, but you can see that we've chosen to focus on the Chinese retail business, since that's where the majority of its growth comes from and earnings come from. And that is in these sections here. And then below that we have Chinese wholesale, international retail and wholesale, cloud computing and other revenue, just categorized as like other segments. And then we apply simple quarter-over-quarter growth rates to those each one of those businesses. So our focus for the purpose of this model will be in this section here. And there are two key aspects that analysts tend to focus on within that section, and that is the GMV and the monetization rate for both the PC and mobile markets. So the first metric, GMV, represents the total value of all products and services on the marketplace for Alibaba. So that's the Chinese retail marketplace. And that's whether or not the transaction actually settles. So this is the total potential opportunity. So when we want to change the macro assumptions about the Chinese economy, this is where we're going to change it in our model. We're going to, if we think things are going to slow down a little bit more, then we're going to decrease the GMV in future periods. And if we think it's going to, the economy as a whole is going to get better and retail spending in China is going to get better, then we would increase the GMV. Now the other side of that, so that doesn't represent all of the revenue that's going to Alibaba. The other side of GMV is the monetization rate. So this is Alibaba's actual realization of earnings from that GMV. So now this is less a macro concern and more an issue of Alibaba's ability to execute on its growth strategies and obtain more or less market share over its competitors. So if those are the metrics that you're going after, you'd want to change the monetization rate here in mobile and here in PC. And there's also some fluctuations between mobile and PC, so we're seeing more and more users switch over to mobile devices and less going from PC. So that's also something we've baked into our model. So now with the exchange rates and the monetization and GMV rates that we have in the model set as it is now, you can see by the orange cells that we have met the consensus estimates on both the Chinese yuan and USD basis for the next 4 quarters and the full year of fiscal 2017. And we've also met the bottom line EPS estimates. So there are a number of puts and takes within the profitability measures, so gross margin and operating margin, and we're not meeting consensus estimates because not all analysts report those, so it would be incredibly difficult to meet the consensus gross margin, operating margin, net income margin, and still arrive at the consensus EPS estimate. In fact, it would be impossible. So if you'd like to change any of those measures, feel free. They're in the ratio section below the segment details. So you can see we have cost of revenue as a percentage of total revenue, so that would get you to your overall gross margin. Then we have the OPEX items, which would contribute to the operating margin. We also have other income, effective income tax rates, so you can change all of these figures, and obviously at that point you would your model would start to basically move away from the consensus EPS estimates, but if you want to run some sensitivity analysis ahead of the release, that would be a good idea. Then we also have a breakdown of the non-GAAP items, so it's primarily stock-based comp and impairment of goodwill and intangibles, so you can make adjustments to those as well. And then we break down the non-GAAP EBITDA, since that's always a key metric in the release. So after making those adjustments, you can see what the final EPS would be. And if you wanted to take a more macro sort of view, you could also change the FX rates. So now that our model is calibrated to meet consensus estimates, we can scroll down to the valuation section and take a look at where we stand heading into the release. So shares closed on Friday at about $70 a share, which represents about 23 times the next 12-month consensus EPS estimate on a USD basis. And you can see that's the low end of the range over the last 3 months, so there could be some room for multiple expansion, assuming that management can continue to execute on its monetization rate and that the macroeconomic headwinds from the Chinese retail economy haven't had too much of an impact, or at least that the majority of that impact is already priced into the earnings estimates and share valuation. Be sure to check back after the company reports results. We'll update this file and see what the new valuation is. And also join us this week for the other earnings calls. So we have Apple, we've got Amazon, we've got Facebook, GoPro, McDonald's, and Microsoft. So very busy week. Keep checking back our website for our latest updates to our models. Thanks for watching.